Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Good afternoon.
Well, China is holding its biggest political event of the year, the two sessions. They're presenting a new 5-year plan, announcing this year's growth target as well. Investors are watching that and also some moves by the People's Bank of China. What's the story in China today?
Yes, as you said, they're having this economic growth meetings. For 2021, their economic growth target is set at more than 6%, according to Premier Li Keqiang. And Chinese leaders announced that the second largest economy, expect to keep its consumer price inflation at around 3%, and it is seeking about budget deficit goal of about 3.2% of GDP. Also, the government aims for continued improvement of urban unemployment rate of approximately 5.5%, and plans to create more than 11 million new jobs in urban area. In 2020, the country's GDP expanded 2.3%, while the global economy was shrinking. But nevertheless, it was the slowest pace in more than 4 decades. And they want to see that number pick up to above 6%. Also, in terms of the Bank of China, PBOC, they have injected some additional liquidity for 7 days reverse repo method of about 20 billion. However, though, net liquidity injection was actually negative, that some part of that was maturing. So overall withdrawal of liquidity was about 10 billion. So people are saying that Chinese government is doing some tapering. However, though, if you think about the level of expansion that you are seeing for the fiscal side, it is estimated to be about 25 trillion yuan, which is about 27% of GDP of Chinese government. So they continue to focus on improving the economy and supporting the economy using these kind of measures.
Looking at the global stock market, Wall Street took another big hit overnight, again on the surge in bond yields. Futures down right now as well. The Fed saying inflation's ahead and apparently not giving enough reassurance about what it's going to do about it. So tell us about the global markets.
Right, I think that the U.S. equity market reacted quite poorly to the remark by Jerome Powell. He has said that the Fed will continue to watching over the inflation and will continue to provide the liquidity to the system. But he didn't say that they will expand the level of the QE, quantitative easing. And because of that, we saw the interest rate jumping quite sharply to close to 1.6% of 10 years government bond rate. It kind of improved about a few days ago, and that market did quite strongly because of 10 years bond rate going down to about 1.4%. But with this comment coming up from Powell that the interest rate spiked, and people are expecting the inflation is going to be coming through, and that is resulting into this kind of trend of the rising interest rate, and that is putting a dent to the equity market, particularly growth sector of NASDAQ. As you can see that the NASDAQ was down by about 2.1%, while the S&P 500 was down 1.3%. And if you look at the last 2 weeks period, NASDAQ is down from the peak to bottom of 11.4%, so quite significant correction. Clearly, this fiscal front of 1.9 trillion of the COVID relief package that is expected to come through by end of this weekend, as soon as this weekend, and people are expecting the economy will recover and that inflation will pick up and interest rate will show a rising trend.
And today in Korea, the KOSPI dipping below 3,000 points early in the session, but recovering some of that towards midday. Retail investors, though, apparently seeing a chance to buy. What happened today in the local market?
Right. If you look at overall global market, despite the correction that you are seeing in the last 1 month or so, everybody are expecting that the economy will recover on a global scale, including Korea. And if you look at the Korea's export numbers, including the semiconductors and electric cars and electric vehicles, all seems to be showing very strong improvement. Only concern is the domestic side of consumption. But as you know, that Korean government is trying to do the supplementary budget to improve that number. So all in all, everybody are expecting that the KOSPI will do better because economic growth will come through. That will result into better than expected earnings for Korean corporations, particularly export-related companies, including Samsung Electronics. So resilient share price movement of these export-oriented companies, it seems that KOSPI did not go down as much as what other countries did yesterday. KOSPI and KOSDAQ were down actually less than 0.5%. We think that if the earnings improvements come through, then yes, we will continue to see equity markets try to do better in the future.
And Mr. Yu, last year, Korea's per capita gross national income fell again. It's the first time it's fallen multiple years in a row since the global financial crisis. We'd been wondering when income would reach 40,000 and catch up with the advanced economies, but it looks like it's backtracked to around 31,700. Obviously, the pandemic was a factor, but what can we expect going forward?
Right. I think that it's because of the pandemic and also the overall export weren't doing too well last year. That resulted into a negative growth rate of the disposable income. And also, actually, the overall consumer debt level is extremely high, around 100% of GDP, and that actually continues to put that to the overall consumption growth rate. And this is why we think that the domestic consumption is not going to be the key driver for the GDP growth rate of Korea, but rather it will be the export and global economy. And luckily, we are seeing export growth rate of two-digit number this year. We think that this kind of trend can continue because of very strong super cycle that's happening in the semiconductor industry as well as electrical vehicles. And Korea seems to have a quite reasonable market share. Actually, particularly for the DRAM side, Korean companies have more than 70% market share. Obviously, with the super cycle happening in semiconductor businesses, we will see that kind of growth happening on the export side, and that will result into better than expected disposable income growth rate as well. However, though, as I said, it will not be all widespread of growth rate in the disposable income, but rather specific sector or specific companies, particularly export-oriented manufacturing industry, would the one that will show strong growth rate of earnings as well as the salary increase or disposable income. But as for the domestic consumption related, it will be quite tough year to come through once again.
Well, if we could briefly talk about currencies, the Korean won's lost significant strength against the U.S. dollar in recent days. Today, touching 1130 almost at one point. A month ago, it was more like 1100. So going back to the Fed, perhaps, what do you see happening in this area?
Right. In terms of the currency-wise, it's the reason why the Korean won is depreciating is not because Korean economy is doing bad. It's just that you have seen interest rate rising in the U.S. to above 1.5% for 10 years, and that is much higher interest rate than any other countries relative to, say, European euros or Japanese yen. So if that's the case, then the money inflow will continue to happen to U.S., and inflow of money, that means actually currency appreciating for U.S. So if dollar strengthens, then that kind of trigger affects the Korean won to depreciate. However, though, if the U.S. dollar strengthens too much, that could be quite negative relative to the China. So I don't think that the dollar will continue to show strength over the next 12 months, but rather it will trade in a range bound. So anywhere below 90 of dollar index, it will be difficult to achieve. And also anywhere above 95 of dollar index, that will be also difficult to achieve. So it will be a range bound, which means that the Korean won will be also range bound at 1100 to say 1150. So it won't be a major factor to affect the equity market or the global economy.
Got it. All right, Mr. Yu, thanks so much for sharing your insights with us today, as always, and have a great weekend.
You too. Thank you very much.